Right, it's the got the takeover today with Willem, welcoming him to the show and Plan B. I haven't seen you in a while, Plan B. Well, I've never seen you actually. I've only ever talked to you. But how are you, man? You well?
Yeah, I'm great. I've been sailing for the last couple of weeks, and it was great weather, great boat, and I just love to do it. So yeah, I'm fine. Thanks for having me on again.
Man, you're welcome whenever you like. Oh, well, unless the stock to flow model fails, then like everything's going to be over for you and us and our friendship.
Of course.
And by your suggestion, we've got your good friend Willem on the show. Welcome. How are you?
Yeah, thanks. I'm well. I'm in Switzerland now. My base is in Amsterdam. That's where our office is. I'm the fund manager of the Commodity Discovery Fund, but I also have a setup here in Switzerland. I have the Bloomberg here. I have a better view. The sun is shining again because the weather was very bad here.
Well, it's a bit windy here. It's a bit cold. We've had some good weather recently, but I'm off to the Caribbean on Tuesday and I'm going to have 2 weeks of sun and I cannot wait. And I can't wait to show off on Twitter and show everyone where I am and where they're not. Well, listen, guys, great to catch up. This is going to be a fascinating conversation. Willem, I do want to start with you because I think your background is very interesting. You wrote a book, The Big Reset, War on Gold and the Financial Endgame. You are traditionally I would say a gold bug, but you might correct me if I'm wrong. But you're also now a Bitcoiner, so this is fascinating. You've managed to make the leap that Peter Schiff can't make. So there's a lot to discuss here. But do you want, because you're going to be new to the listeners, do you want to give them a bit of a background and then talk about the book you wrote?
Yeah, I think there's a little bit more to explain because I've been a journalist for 20 years. Actually, I started in 1980 as a freelance photojournalist. I worked for Reuters as a stringer. But I also had this interest in investing and money. So I started to invest in real estate in the 1990s in Amsterdam when real estate was very cheap. I was very active in the buy-to-let market, which was very new at that time in Amsterdam. Made quite a bit of money in the 1990s, and I didn't put in any money of my own. So it was all a mortgage, 120% was still possible at that time. So I had 8 properties, all a mortgage. And then I thought I have huge leverage. So I should take benefit of this leverage, but I should also study economic cycles because when the market goes down, this leverage can kill me. So in the late 1990s, I started to study the monetary system, the business cycles, and became intrigued because that was when the internet bubble was at its peak, 1999, 1990, or 2000. And at that time, I was working as the picture editor-in-chief for a Dutch daily. And next to our desk was the economics desk. And I started to write about financial markets. And then I switched over to TV. I was an anchor for Dutch CNBC, one could say, RTL television. I did that 7 years. And then I had the time to study full-time on the financial system. So this was all pre-Bitcoin. This was all pre-Lehman. And actually, my first book, which came out in 2007, I was warning in that book that a major financial crisis would arrive within the next decade. And it all happened within 12 months. So that made me world famous in the Netherlands. And then I quit journalism. I started 2 companies because I learned from my study of monetary history that once a crisis arrived, people want to flee back to something like gold and silver. So that's why I became a gold bug. There was no Bitcoin at that time. I started a web shop, a building web shop, Amsterdam Gold. I sold that one 3 years later when we had 100 million sales. And I started the Commodity Discovery Fund, which was called the Gold and Discovery Fund at that time, because I wanted to have exposure to as many ounces in the ground as possible. And I still run the Commodity Discovery Fund. It grew till AUM, asset management of 200 million now. And we only invest in the 100 best discoveries worldwide, gold, silver, but also other commodities. So that's my background. And I want to stress, I only bought Bitcoin from 2018 in a serious way, but I mentioned in the Dutch edition of the Big Reset in 2013 that Bitcoin was digital gold, in my humble opinion. But since I had so much gold and silver already, well, I thought I don't have to buy Bitcoin. It was a big mistake.
Well, it's fascinating background. Obviously, a very successful career, both as a journalist, an author, an investor. It's quite fascinating. So let's talk about, because let's start with gold. Let's talk about your gold thesis. Why did you become a gold bug? What was it you learned about the financial markets specifically? Because that's going to be a real setup for our Bitcoin chat.
Mm-hmm. Well, the journey through the rabbit hole all Bitcoiners are experiencing in the last few years. I actually I experienced that journey in the late 1990s. So if my first columns are still online, and they're from 2002, 2003. And I was warning everybody, that it was a house of cards. The financial system was a house of cards. And one day it would all collapse, and you should really prepare yourself accordingly. And I've been advising people to buy gold and silver since the early 2000s because, as you might know, gold had been going down for 20 years, so bottomed out around 2000. So I bought my first gold around $300, silver, for next to nothing. And well, I think I have a big following in the Netherlands because for 20 years I've been telling the same story. And I think Plan B, is one of the people who knows me because of this background. So it was very natural for me to look also into Bitcoin. And I was tipped about Bitcoin very early on because I had a large following. And I found it intriguing. I had this gold bullion web shop, and I remember thinking about connecting Bitcoin to the gold we had stored in our vaults. And I was thinking, imagine you can connect Bitcoin to gold. That would be wonderful. But I was so busy. I was writing books and giving a lot of presentations, and it was not my core business to think about Bitcoin. So, that's my background.
So let's talk about gold, and let's talk about specifically the book you wrote, The War on Gold and the Financial Endgame. You talk about in your book how the price of gold has been suppressed. For people who don't understand that, because people will have heard about this, can you talk about how the price has been suppressed?
Yeah, most people think that the price of any commodity, being Bitcoin or gold or whatever, is because of the trading of the physical commodity or the digital commodity, in case of Bitcoin. And as I studied the financial system, I started to learn about the fact that the US was very aware of the fact that you can move asset prices, especially price of commodity, by having very liquid future markets. If you study, I'm also a fan of geopolitical, topics. I study geopolitics quite a bit. And you might remember that there was this Cold War in the 1960s and 70s and 80s. It was capitalism against communism. It was the US against Russia. And the US had been thinking very, very hard how they could bring communism down, how they could bring Moscow down. So, and this has been documented, and there was a plan, and it was executed under the supervision of Reagan and Thatcher, to use the very liquid future markets in the US. They were developed in the 1970s. And they've been experimenting by bringing down the price of oil because, as you might know, Russia's major source of income already at that time was oil and gas. So if you could suppress the price of oil and gas, Russia would enter very, very hard times because they had to import a lot of grain and other food. And this actually, study history, this is the way they brought down Russia. And And that always fascinated me. And I learned it in the late 1990s and early 2000s when I was studying the financial system. And then I became aware that the same techniques, the same price discovery mechanisms were used in precious metals as well. Because precious metals, most people say, what's so special about precious metals? Why would they do all this hard work to keep the price of precious metals in check? Well, as we Bitcoiners understand, gold is the core of the money system. Look at central banks. Not to be negative on Bitcoin, but the central banks aren't buying Bitcoin, maybe yet, but they are buying lots of physical gold. They've been buying more physical gold in the last 12 months than almost ever in recent history. So it shows you gold is still an essential element of the monetary system. And that's why it's essential for them to keep the price of gold in check, because a rising gold price is a warning sign of inflation. And even Paul Volcker, he was the guy who rescued the financial system in the late 1970s, early 80s, when he was the Fed president. He said we only made one mistake in the 1970s. We should have controlled the price of gold more in a more severe way, because as you might remember, the dollar was fixed to gold at a fixed rate of $35 an ounce, up to still 71. And then after Nixon closed the gold window and the dollar became a fiat currency, gold shot up from $35 to over $800 in less than 10 years. And that's why they're sitting on gold and silver. But I always say it's like a ball, which is pushed underwater for too long time. It will jump one day.
Why? Sorry, what is the actual mechanism through the futures market for controlling the price? How do they actually do that?
Well, you could do it yourself if you open up an account with Interactive Brokers or another broker where you can trade futures professionally. And if you put down enough margin, if you put enough money there, let's say 10 million, you can sell an awful lot of silver because you can leverage the 10 million. And actually, a recent study showed that the paper trading in silver, so through futures, where no physical delivery is ever made. So the paper trading in silver is 808 times larger than the physical trading in silver on a yearly basis. 880 times. So you can send it in the price in any direction. But I'm a student of monetary history, and there's not one example that manipulation of a commodity succeeded on the longer term. It always ends. We had a suppression of the gold price through the London gold pool, which was a collusion of Western central bankers to keep gold fixed at the $35 an ounce. And that failed after 10 years. It always fails in the end. And once it fails, you will see a huge jump. And that's why you have to be positioned in gold and silver as well. So I always advise people 25% of your net worth in physical gold and silver, 25% in cash and Bitcoin, 25% in real estate, 25% in equities. I've been saying this for a long time. Added Bitcoin in the last few years. And this portfolio is like an insurance, because we don't know what will happen in the future. We can have a deflationary collapse. We can have hyperinflation. We can have banks closing. We can have stock exchanges closing, stop trading. And if you divide your net worth, this is an advice for people who have over, let's say, $100,000 or euro up to 10 million. And if you divide your net worth this way, you will always survive.
So you think my 100% Bitcoin strategy is risky?
Well, you're young. I don't know what your net worth is. I can understand where Bitcoiners come from. But it's risky from a perspective that things can go wrong in life. Your house can burn down. It won't burn down tonight, but it can burn down. That's why you have a fire insurance. And things can happen with Bitcoin. Even the strongest supporters of Bitcoin say, I go all in because I think it will go to 1 million or 10x, but it might go down to zero. We still don't know. Yeah, there's a very small chance. So that's why you should diversify always.
It's a bit of a fun gamble. Plan B, were you a gold bug prior to Bitcoin?
I was, actually. And that's also how I met Willem, through his books first. But yeah, I was. And I think the gold investors and the Bitcoin investors share this belief in sound money. And they really hate fiat money because of all the things that fiat money bring, the control over money and the debasement actually of all the money. So yeah, I was a gold bug, but to be honest, I sold all the gold, and I had physical, by the way, not the paper gold, of course. Of course, after reading Willem's books as well, it's very obvious you need the physical thing. But I sold it all in 2015 and bought Bitcoin with it.
Yeah, it's an interesting thing because we'd have gold bugs who haven't been able to cross over to Bitcoin, and I think it comes down to there's a few factors. One is that Bitcoin isn't like this tangible thing that they're able to hold, and a few other things they might not understand. I know some don't like the fact that it's inelastic. We have Bitcoiners who refuse to buy gold because they think Bitcoin is going to demonetize gold, and then we have people like Willem who's like having a balanced hedge bet across them all. I find it really super interesting, actually. But what I find really interesting, Willem, is that you did make that journey across from Bitcoin to gold. We have Peter Schiff up here. Where is he? He's my hero, Peter Schiff, who refuses to accept Bitcoin in any way, shape, or form. And he won't cross that divide, but you did. So you heard about Bitcoin early on. It obviously was on your radar for a while. What was the change for you? When did you finally, what was the trigger for you to go, hold on, I get this now. I need to start investing in it.
That's an interesting story because during the first run, or one of the first runs, I was contacted by Dutch media. What do you think of Bitcoin? And I tend to analyze markets from a technical point of view, Elliott wave point of view, and it was a clear bubble. So I warned, it's actually still online, I warned in, what was 2012 or 13, that this was a bubble. And when, I think that was the run towards 1,000. And then we got a correction. And from my knowledge of monetary history and my financial cycles, I thought this one is going down 80-90%. And then it reached $100. I still remember. And I thought I should buy it now. But I wasn't that cash rich at that moment. And I still thought it would go back maybe to 500 or 1,000. And I forgot about it. And then it shot back up 2,000. And then it ran towards 20,000. And I had the same feeling, the same discussions. I warned people, be careful, was in 2017. This is the late stage of the hype phase. And it will go down another 70 or 80%. And that happened. And I warned on the internet, I warned friends, I warned on Dutch TV that I called for the top in December 2017. And then it went down another 80%. And then I thought, well, I've been stupid enough not to take advantage of the 80% down corrections. I shouldn't make that mistake again. So I really started to study Bitcoin much more seriously. And then I started to buy around 5,000-6,000. And I expected Bitcoin to bottom around between 3,000 and 6,000. And I decided to put quite a bit of my net worth around that level. But there's a nice story to tell because we have in our fund, we have over 1,000 high net worth investors. And I made a decision as a fund manager and being the principal of the fund that we should add Bitcoin for at least 10% through an ETF because we can't hold the Bitcoin itself. And then when I proposed this idea and we even did a survey, it turned out that there are many Peter Schiffs. Some of these people, they went mad and they were so aggressive, and I couldn't do this. So we took we took the plan off the table because there's especially among gold bugs who are in this space because they want to see it and be able to touch it. Bitcoin is the most stupid thing you can do with your money. So I understand.
And do you still, I mean, you must have friends who are gold bugs. Do you still talk about it with them? Are people gradually coming over, or is it still?
Yeah.
Are there some people who are just they're done? Then Bitcoin is an always no for them.
No, if we take 100 of our clients, 10-15% is very negative on Bitcoin. There's, I think, 20, 30, maybe 40%. Actually, we did a survey and it showed 30 to 40% thinks it's interesting. 10% is very positive, but they don't know how to do it because our clients are 50 plus. It's my generation. They don't know how to do it. They still don't know how to do it, and they will ask me to set up a Bitcoin fund, and we looked into this, and even with Plan B. But I don't want. I'm almost 60, and I don't want to have several funds, and I want to specialize on the discovery investing. What I do, that's what I love, and let other fund manager have the Bitcoin fund. But there's a very large part of our investor group who's very interested. And after the Corona crisis started and all the money printing we've seen in the last 12 months, this group is growing rapidly.
And what is your personal Bitcoin thesis? Because there are a number of different kind of factions or groups of people that sometimes overlap. Some people just think of Bitcoin as an investment and they don't really care too much about the fundamentals. They understand other people are interested, they invest in it. There are some people who see it as a tool for freedom that support activists. There's some people consider it the best form of money that's ever existed. There's some people consider it a hedge against inflation. There are a range, and like I say, they do overlap. Myself, I'm more in the camp of I think it's the best money, and ultimately people converge on the best form of money, which is why I'm invested in it. What about yourself? What is your primary thesis on Bitcoin?
Yeah, I'm making notes because I get so many thoughts. This is a great question. This is a great question because this touches on everything. Yes, Bitcoin is the best money ever created, period. Even gold bugs should agree, but they can only agree when they studied it enough. And it's actually quite hard to understand. It's quite hard to go down the rabbit hole and to understand. And actually, the younger generations, they are much more aligned with the whole concept. And for people of my age, it's very difficult to understand. And this hasn't to do with the IQ, but it's where you come from. The concept of something being digital for the younger generation, that something is digital is a positive, is not a negative. But for the older generation, when something is digital, is a negative. Because you don't understand it. But to come back about the money part, because it's the most important part. It is the best money. But because it is the best money and it's so superior to fiat money, it's so fucking dangerous to central bankers and the elite and everybody in the system, because this house of cards is on the verge of collapse. And then you have Bitcoin, which could eat it all. And actually, I've been in a call. We are connected to OMVIV. We're part of OMVIV. And OMVIV is a private think tank based in London. And actually is the only place where central bankers meet up with the private sector. And because we have a fund, we are one of the private um, sector actors who are allowed to join the discussions. If you pay a fee, it's like a membership, you're allowed to be in the discussions. And because of COVID, all these discussions, all these seminars are online now. So many more of the private sector actors are invited to join. And then you're in a meeting with Fed guys. And they know there are some non-central bankers in the call. But after a while, they forget because there's this strong group mentality and group think. So I'm very selective what I publish from these meetings. But I was in a meeting with a very high official of the U.S. Treasury, and he was saying it like it is. That you have the fiat money system, you have Bitcoin, only one can win. They understand.
Yeah, they get it. Well, we'll get onto the infrastructure bill. We'll talk about that soon because that is certainly an attack vector. And I also, you talk about this house of cards ready to collapse. It feels like we are approaching a very extreme version of what happened in 2008. I definitely want to pick your brain on that, but I am just going to defer over to our mutual friend, Mr. Plan B, to ask him a few questions because you've been pushing some interesting tweets recently. I saw your tweet regarding the overnight repo. But before we do that, let's talk about stock to flow, man. This has become your thing. We spoke about it the first time we did an interview. I can't even remember. I mean, it feels like it might have been a couple of years ago. And, you were very clear at the start of this. You said, this is a model and it only works until it doesn't work. And I think we're going through a real test of the model right now. We know Mr. Corey Clipson isn't a fan of it. We know a lot of people are fans of it, but the model got a good test this last couple of months. How are you feeling about it?
Very good. And it's actually the third test of the model to the downside. Because a lot of people forget that when I introduced this model in 2019, the beginning of 2019, prices were very low. That was at the bottom of the bear market and totally out of the bands of the stock to flow model. So it had to go up to validate the model, and maybe more so than right now. And it was interesting at the time, but since that we had COVID, of course, last year, the big spike down, and now we're in the third difficult period at the lower end of the model bands. But the recent jump back up gave some confidence, and I never had any doubt. At least until I still think it will be $100,000 end of year minimum, and there's lots of time. I mean, we're at 40 now, so that's a 2.5x. We've done more in 1 or 2 months historically, so it can be done. I'm very confident, but yeah, it's funny to see that we overshoot at the upper side of the bands of this model as well, right? And it doesn't matter. People always complain, and especially people that are not used to working with models, I guess, because when the model breaks the upper side, or is it the upper band of the model, the price, then they say the model is broken at the upside and will be in a super cycle, etc. And when it's at the downside, it's invalidated. We go to 20,000. I still see people on the internet calling for 20,000 Bitcoin. I don't think that's going to happen. 100K by Christmas.
That was a buy-in signal for me. The people calling for 20K reminded me of when people were calling for 1K or 1.5K a couple of years back. That was a buy-in signal. I actually went into the market and bought. I bought at 32K when people were calling for that.
Yeah. Peter, what people sometimes forget is that the model is just a model. I need to have that. I'm quantitative from background. I need to have some compass. It's very rough, but it is something. But people should not forget that I'm a former institutional investor. So I traded on dealing rooms. I managed bank balance sheets, insurance balance sheets, pension balance sheets. I have lived through 3 crises. And the last one, of course, was the COVID crisis, but before that, the global financial crisis. I've seen this system. This system is very broken. The level of depth, the interference of central banks. It's beyond anything we have ever seen before. With the entire German yield curve below zero, negative interest rates. I never seen that before. I wasn't taught negative interest rates in university, so my strong belief in Bitcoin and also in the model is also coming from that 25 years of experience as an institutional investor and knowing it will pop. And that is yeah. I sometimes think the 100K is even conservative. And
well, I've got a bet with American Hodl under over 300,000. I took under, and I think I might win it. What would invalidate the model? Say if it topped out at 90 and bounced around 90, would that invalidate? Is there a certain level where you think the model invalidates?
yeah, oh, absolutely. It's just a linear regression, right? So it's very obvious when that regression is no longer valid, and everybody can calculate that themselves. But it's people want a level, some sort of target level when the model is valid, and that's how we came to the 100,000. But yeah, basically it says we should go up with the stock to flow ratio that has come up since the halving. So we're sort of waiting for that. But when it stays down, so when we stay at 30, 20, $40,000 for, well, a couple of years, for example, a couple of months, then it's obvious that this linear regression line is no longer fitting the data.
Yeah, they'll come after you, man.
Yeah, and there's also I don't care. I'll be the first to admit it because I have money on the line. So it's very easy to see when it's invalidated, and people can do that themselves. And of course, there's outliers, right? The COVID thing last year was an outlier. The 2019 bear market was an outlier, and we bounced back. And I think this is an outlier as well, and that's perfectly okay within a regression model, as what the stock to flow model is.
Yeah, well, I still think it looks good. I still think we will break 100. I don't think we will hit the crazy 300s that people have been talking about, but I think Pantera predicted between somewhere around 115, 120, which I think is a fair prediction as well. And yeah, we have been through a lot this last, not just few months, but yeah, I mean, the model was looking great. We've had what feels like coordinated FUD. We've now got this infrastructure bill. It's a wild time for Bitcoin. We've got El Salvador making it legal tender, other countries interested. It's a wild time, and it'll be interesting to see what happens. But let's talk a little bit about what's going on in the financial markets. So you put out a tweet that the other day was quite popular, where you talked about the overnight repo market hit $1 trillion. Can you explain what that actually means so people understand why that's quite a scary situation?
Yeah. It's the repo market, reverse repo actually, but I talk about
sorry.
repo. It's a facility of the central bank in America, and it basically is a facility that banks and other financial institutions can park their cash. And as we all know, there is excess cash at the moment in the market. The market is full of cash. In fact, everybody will recognize the big problem that we have right now in financial markets. It's a problem for institutional investors and also for retail investors. What should you do with your money? I mean, if you already have like 2 or 3 or 10 houses, a good equity investment, some stocks, maybe the 25 portfolio that Willem has been talking about, then what do? You buy maybe some gold, you buy some Bitcoin. What else? Where do you go? And especially if you live in Europe with a zero or even negative interest rates, putting it on a bank is not very wise. I mean, in the Netherlands, you get negative interest rates as a retail investor on accounts. I think it's 25,000. Everything above that is negative interest rates. So that problem is also present with financial institutions. They have a cash balance at the end of the day. So they have investments that mature that will bring money on the account. They'll do investments. That releases them of some of the cash. They have deposits of clients, and clients taking the money off the accounts. But at the end of the day, they could have like a couple of billion in excess cash that they have to park somewhere. And normally, in a normally functioning market, they would park that at another bank. And they get some interest on that. But if they don't trust each other, the banks, and if there's no other investment that makes any yield at all, and they're basically in the situation I described, they can now park their excess cash with the Federal Reserve. They get treasuries as a collateral for that overnight loan, and so it's very safe. It has minimal capital requirements, and it's obviously very beneficial. But the strange thing, of course, is that there's at the moment $1 trillion parked at this facility, and that's more than we've ever seen before. And it's a sign. It's like the credit default swaps in the 2008. It's a sign, like a canary in a coal mine, that something is really wrong. I think something is really wrong. It is strange that the central bank, the Fed, is actively doing a quantitative easing. So it's buying treasuries, bonds, equities, everything with freshly created money. So it's providing that cash to the market actively. And then the market is filled with excess cash. And then it has a facility to take that excess cash off the market again. Why not stop QE then? That would be the same. You could just sell the treasuries again. You could do tapering, but we all know what happens then, and it has a huge impact on interest rates. All this, they don't want the U.S. curve to go down. They don't want to go. They don't want the U.S. interest rate curve to go negative like it is in Germany, but they also don't want the interest rate to go positive, because if interest rates go back to normal levels, 3%, 4%, this whole system explodes because nobody can pay that load. So it's very interesting, and I advise people to watch it like a hawk, what happens there. And I see it together with the balance sheets of the central banks as the same as a warning signal as the credit default swap spreads in 2008.
Yeah, I'm going to defer over to you, Willem, because you obviously wrote your book in 2007, and like Michael Burry, you recognized what was coming, and you said perhaps the next decade, it came the next year. You are obviously very tapped into financial markets and understand how cycles work. And you said earlier, you think another financial crash is coming. To me, as a very inexperienced investor and somebody who doesn't understand the financial markets like you, this feels way scarier than what happened in 2008. This feels like some form of major global economic collapses potentially coming. Am I being hyperbolic, or are these similar feelings you have?
Yeah. Well, actually, I'm a little bit more positive than you, and maybe Plan B, because the title of my last book on these topics was The Big Reset, and I wrote this book in 2012 and 2013, explaining that we're in the final phase of the current dollar-centered financial system. And it's called The Big Reset because you can reset a monetary system. We've seen resets in the past. we've seen a reset in 1944. And the reset in 1944 wasn't a collapse of all financial markets. It was the start of all financial markets because we had a collapse in the 1930s and the Second World War. So when the major financial trading partners in the world agree and join forces, being China, the US, Europe, Russia, Middle East, you can agree to change the system. And there are three main parts of this reset thesis. And one is that we need a debt restructuring because the main problem now, which we really haven't discussed, is the financing of the American budget. You know, we can't go on much longer because the primary dealers on Wall Street can't take the incredible amount of new treasuries being brought to the market. And that's why we see all these repo crises. I have a little bit different opinion on this than Plan B. Because the first repo crisis started in September 2019. And that was because the primary dealers on Wall Street couldn't take all the new auction treasuries, US treasuries, onto their books. So the Fed needed to help them. And that's why we saw an increase of the Fed balance sheet late 2019. And since the Corona crisis started, this all, became a little bit more urgent. But to come back to the big reset, one of the main parts of the reset thesis, we need a debt restructuring worldwide. And a debt restructuring is a balance sheet restructuring. Somebody has to take the losses. For example, the pension funds. Well, if you restructure the debts and you also restructure the pension funds worldwide, you can make a new system and start again. But China has to agree, and that's why China has been invited into the IMF. China has one of the leading directors in the IMF is a Chinese guy now. The Chinese renminbi has been added to the SDR. SDR is the IMF money, is a currency basket by the IMF. There are 5 currencies in the SDR: the dollar, 40%, the euro, the yen, the pound, and the renminbi has been added in 2050. Why? Because China is part of the club now. Because the financial system, you should see it as a club. And this club is totally concentrated on fiat money. And that's why the club will never use Bitcoin. There's only one reason why Bitcoin could win, because the whole club collapses and loses control. But since the club can make laws and has the guns, this won't happen. And China is of the same opinion as the US. And the EU is of the same opinion as even the Arabs in the Middle East. They don't want the fiat system to come down. And you don't want the fiat system to come down because then you have Mad Max worldwide. And Bitcoiners make the mistake by being too naive to think that Bitcoin can compete with fiat and win. Well, good luck with that, but I don't want to live in that world. But then the Bitcoiners say, we'll go to El Salvador because there it's legal tender. But that's not the way the world works. So the only thing you can do, and that's the only success Bitcoin can have, is Bitcoin can be very successful as an alternative currency, as alternative money, the way gold and silver can be successful as an alternative. But gold is still part of this club. This club, the international monetary system, is built around gold. So the central bankers are much more willing to go back to a gold standards. And that's why I write in the big reset that one day we might get a gold revaluation and they might bring gold back as a 6th currency in the SDR and restore trust in the monetary system. Because central bankers, they all know this. The Bitcoiners always think they understand the financial system. I can tell you, central bankers understand a little bit more because they created it.
It's an important point. Let me add a little bit, because I think that's also why, for example, people like Peter Schiff are so holding on to gold and not into Bitcoin, more than Willem, by the way, because Willem is in between Peter Schiff and me. But the fact that the entire system, the Fed, the U.S. military has the same interest as gold is worth something, and they're against Bitcoin, so that makes Bitcoin very risky. And I see that point. I mean, it's a fair point to make. But I'm more pessimistic, yes, than Willem, because I think, and I'm not talking as a Bitcoiner, but as a former institutional investor that dealt with the central bank on a daily basis, I think they already lost control. I think they of course they want the US dollar or whatever successor currency there is and gold to survive and the whole system, but it will not survive because they already lost control. For example, one thing is they cannot raise interests anymore. So there is no yield to be made. There is no yield, nothing to be earned. It's a big problem for retail investors and for institutional investors. Read pension funds. So this yield is not gone. It's just suppressed. This yield is not gone. For example, it goes to places where it's like water. It goes to places where it can live. And one of those places happens to be Bitcoin, but there's more. And I'm talking basically about volatility. Because this central banks, but also the governments, and you see it with, actually I don't want to mention the word, but you see it with COVID as well. People are not allowed to die anymore. It's zero COVID. And it's the same with banks. Banks are not allowed to default anymore, or companies. So they save it. But it cannot be done.
It's crazy. When I was doing my research into what's his name? The guy's working under Trump. His Mnuchin. When I was doing my research into Mnuchin and how the FDIC stepped in to say they would insure all, they provide insurance against all defaults, and I was thinking, it's one of these situations where you have to have winners and losers, and you have to let failure happen so the system can correct. If you don't allow failure to happen, you just create a real bubble. People talk about a Bitcoin bubble. You create a real bubble. We have to allow for failure in the system. And I don't understand why we've got to this point where we don't allow failure. It's a bit like kids' football when they don't allow them to win, at a certain age. They don't allow them to win or lose games or win or lose trophies. They just play and every game's a friendly and it's like, why are we not teaching people about winning and losing?
Yeah,
it drives
exactly.
me bonkers.
And it's not true, right? It's you can save the banks, you can save Boeing and the cruise ship companies and all that, but somebody has to pay.
Yeah, the little
There's
guy.
winners and losers always. So they socialize the losses, and it will introduce inflation, asset inflation first. That's great for the top 10%. That's too bad for the bottom 90% or the people without assets. So there are still winners and losers in this game, and for example, for investors, if you look at a very through a technical glasses to the market, in the end, it all boils down to volatility. The more volatile an investment, the more yield you can make. It's the old capital asset pricing model. Nobel Prizes were won with that. There is a huge amount of volatility in Bitcoin at the moment. And volatility is an asset class, right? You can invest in volatility. and that's, for example, what I find very interesting or disappointing, or as an investor, not that attractive about gold. There's no volatility. So where should the return come from? Or maybe it spikes up. It can be low risk for years and then it spikes up. Maybe it's that. And it's with Bitcoin as well a little bit. But the volatility part, and the suppression of volatility, defaults, and deaths by governments, that is not a zero-sum game, and it will end badly.
Willem, you mentioned there was 3 parts to the getting out of this, or avoiding this financial crisis. You mentioned firstly the restructuring of debt. What were the other 2 points?
Yeah, you're a good listener. You prepared very well. The first one is the debt restructuring, but actually the first one, normally I say, is to find a successor for the dollar, to find a new anchor for world's financial system.
Well,
And
America aren't going to like that.
Yeah, if you truly believe in a collapse of the whole system, like we just discussed, we always say an optimist buys gold and Bitcoin, but a pessimist buys guns and canned food. If you think about the collapse, if you truly think about the collapse of this system, sell your Bitcoin, buy guns and canned food as much as you can, and a cottage in the Rocky Mountains or whatever, wherever. If you buy gold and if you buy Bitcoin, you buy those assets because you think they will go up in price. But for assets to go up in price, you need markets to function. If you have a collapse, you don't have functioning markets. So Bitcoin should understand that very well. But to come back to the thesis, we need to find a successor for the dollar. All insiders agree on this. Actually, I just wrote a piece for Omviv this week. It will be published next week, in which I give all quotes and statements by central bankers. Mark Carney saying in Jackson Hole in 2019, we need to find a successor for the dollar. Jean-Claude Trichet, the former president of the ECB, stating last month that the system needs to change and we should turn away from the focus on the dollar to a multi-reserve currency system. What does he mean with a multi-reserve currency system? It could be the SDR. That's a currency run by the IMF. There are 5 currencies in there. You could add gold and you could add Bitcoin. Well, they won't add Bitcoin, but they will add gold, as I said. So that's the reset. That's the big reset. And this is openly being discussed among the elite in the system. And that's what my story is all about in the book and in the piece which will be printed and published next week. And that shows you that central bankers and the elite, they understand that we're on the verge of collapse. And they understand they need a reset. And that's why the World Economic Forum explains, Klaus Schwab, the president, explains, we have a small and closing window of opportunity to use the current corona crisis to change the system. And that's why they love the COVID crisis. I don't know how it started. I don't know. But the only thing I know that the masters running the club will use every crisis to change the system in the way they like.
Who's the loser? Who's going to be like you talked about the restructuring of the debt, which may primarily leans on the pension fund. So obviously, anybody who has a pension might see a pension haircut, or might not have the ability to retire. That's a reality for those people. Are they the losers? Is it the older generation and their pensions? So everyone loses,
except the people who are in the right assets. Because what's the problem? The problem is not the debt restructuring. The problem is, the biggest problem is always the one we don't see. It's the elephant in the room. The currency debasement is the problem. And who is a victim of currency debasement? Everybody.
Yeah.
Except the guys who own real estate, gold, Bitcoin, and commodities.
Oh, so, okay. Well, there will be people listening going, okay, well, I understand. I agree this is coming. I think, look, everyone I speak to, whether it's Lynn Alden or Caitlin Long, Travis Kling, Pam B, like everybody I know who studies the markets and the structure of the economy, everyone is predicting that a crash is coming. It's this kind of general acceptance. It's the shape of which people don't.
It's not a crash. It's a reset. And what might happen with it, within a reset, they close down the stock exchange. You don't have a crash, you know? Jim Rickards, read his books. He's talking about ICE 9. You just freeze it. If you freeze, if you close down the stock exchange, it happened in Kuwait years back. It happened at the start of the First World War on Wall Street. It happened in 9/11, after 9/11. The things they are doing now and planning now after COVID are so strange. I can imagine them telling us because of COVID we need to close down the stock exchange because these are not normal times. We first need to come back to normal times in which COVID has disappeared, and for the time being we stop trading, and then you lock in all profits and nobody will take a loss, and then they will tell you we need a financial reset, the big reset being part of the great reset, and once we resetted the system, everybody's bank accounts, we need time for that because it all had to be converted to the Banco or to the SDR, and then we start trading again, and then after 12 months they'll say, oh, we're still not ready for it. So many things can happen without having a big crash.
Okay,
and
that's
I think
fair.
people will be surprised by the creativity of the members of the club.
Yeah,
But-
I imagine it to be a bit like the introduction of the euro. Because, most Europeans went through this phase of losing their currency and getting a new currency. It's a bit like the dying of the euro and the dollar and the yen and replacing it by an SDR or bank or whatever. So there, and also with the introduction of the euro at the time in 1999, 2000, there were winners and losers, right? I know the Dutch perspective, of course, best, but we lost 20% overnight of all our savings and pensions.
Okay.
And somebody got that 20%, which is okay. I mean, it's but that's what happens overnight.
So how would you prepare, Willem? Like people listening, be like, some people are like, okay, I understand something's coming. It might be a reset. It might be a crash. We don't know. It might be a crash before a reset. Who knows?
Yeah.
But something's coming. Something has to change. The global economy is fragile. There are clearly some very strong signals in the market with regards to the reverse repo market, negative interest rates, debt to GDP levels. There's enough signals in the market to say something has to change. How do you think people should be preparing for this? Right, outside of buying guns and tins of food and locking themselves away.
Well, then I always go back to scenarios. You have to think in scenarios, and I said it before in this chat. What are the biggest risks? Inflation, number one. Inflation, currency debasement. Inflation, number one, could lead into hyperinflation. So hyperinflation is horrible. Look at Venezuela. Look at Weimar Germany. I studied them all. It's horrible. Don't be glad with hyperinflation in the fiat system as a Bitcoiner because it's horrible. It's Mad Max. Second risk, deflationary collapse. The big crash, the big collapse, like happened in 2008, can happen again. But central bankers know it and they're prepared. And I always tell them, why did it collapse in 2008? Because the fire engines were still in the station. And now the fire engines are all out on the streets. And the money and the water tanks, they're all filled now. So as soon as something is about to collapse, they'll have a new repo facility or whatever. So that's why I don't believe in a collapse, because you can stop every collapse by throwing more money at it, like throw more water on the fire. And that's why currency debasement is a much higher risk, and hyperinflation is a much higher risk than deflationary collapse. And once you know that debasement of currency and hyperinflation is the largest risk, you know what to do. Buy all assets the government can't print. And even the chief investment officer of BlackRock, he wrote an article. They took it offline. I still have a copy. He advised investors to buy all government can't print. So if you want to know why all government can't print is going up now, stock exchange, real estate, Bitcoin, commodities, it's because the value of money is going down. Should always turn it 180. When everything goes up, the value of money is going down. That's the main force.
I agree with everything that Willem says, and I hope Willem is right. I really do. Of course, the other scenario is indeed the Mad Max scenario, and maybe it has lower probability, but it's not zero, the probability.
And it could be pockets of Mad Max, right? It's not every country is going to be the same. I mean, we know different countries suffer at different points. We know, for example, the state of Venezuela, because that was brought up. We know that Lebanon is struggling, and we know when there's economic collapse, there's a rise in crime and disorder, and protests and such. Every country could be different.
Yeah, and something better will eventually come from that. But I always look at the Roman system, the end of the Roman Empire. It started with debasement as well, right? The denarii, the silver content. And it led to the end of the empire because even the Roman soldiers didn't accept the denarii anymore as pay. They wanted gold. They said, we will fight, but we want the gold. So, yeah.
Yeah, but the difference now, with another 1600 years down the road from the collapse of the Roman Empire, is that we are this system we have on Earth. We're a big village now. We're all connected. So there's this new Cold War between China and the US, and actually that scares the hell out of me, because we could have a scenario, we haven't discussed this, that the US knows that they still have the military power to strike China. And China is very serious to do the same thing in Taiwan as they've done in Hong Kong. And this will be the big test. And this might be a larger problem for us than the collapse of the financial system, which could be the result of a kinetic war in the South China Sea. But if we pass that and we can convince China and US to work together to make this transformation towards a technocracy. I haven't used that word before, but communism has failed in the 1990s. Capitalism is failing now. We don't have to predict it will fail. It is failing now. And the club is working on a third system, which is technocracy. And what's technocracy? It's very limited freedom. It's state capitalism, what we have in China now. The best example of technocracy is China now. A government which is led by, the scientists, the thinkers who plan it all. Everything is planned, everything is controlled. And within technocracy, and I think they will bring that to the West in the Great Reset. And you see it in the COVID. They always point to the scientists. Look, it's proven. And you have to give in your freedom, because the scientists say it's dangerous to go out. And this is a very Google technocracy. Read a few books on it. And that's the big risk. And within technocracy, we don't have free markets, but we'll have all these institutions. And we see it already. All these major corporates in the corporates, all the major corporates are joining force with the World Economic Forum, and they all want to be inclusive, and they all buy up still the bonds, because the government needs to be supported. So this will morph into a system in which all powers and all big money, they all back the same system. And it will be very, very difficult and very hard for us, alternative investors, to keep our freedom. And that's why Bitcoin is being fought.
Basically, communism, right?
Yeah, it is communism, but they call it technocracy.
Well, this is why I think people are very nervous about the infrastructure bill, because
Sure.
it looks like a backdoor way of restricting and then ultimately banning Bitcoin. I mean, that's the US banning it, but it would have a catastrophic effect on price. I think your model might fail at that point, Mr. Plan B. But that's why I think people are nervous about the infrastructure bill. Now, the infrastructure bill is quite interesting because, as I understand it, even if it gets through the Senate and then the House, it still doesn't come into law till 2023. It provides a real opportunity for other countries and jurisdictions to do the complete opposite, like El Salvador has, and be pro Bitcoin. And if enough jurisdictions do that, there's a chance that there will be Bitcoiners who'll be thinking, well, I might need to reconsider where I want to be. I don't know how that plays out. I could be completely wrong. What's your read on the
but if China would have allowed Bitcoin to become a serious currency, then you could have a very good scenario. But if I see all major forces in this world, all the major economic blocks are making life difficult for Bitcoin and crypto. They're starting to roll out their own central bank digital currencies, and that's the most stupid cryptocurrency you can design. But that's their plan, not Bitcoin.
What are you, Pamby? What's your read on the infrastructure bill?
Yeah, maybe it's hopium, but I hope the senators, Luminous and others, will put amendments in there and reason returns. On the other hand, I've seen, this is the infrastructure bill. I've seen the COVID bill, the COVID relief bill. I've seen the bills after 9/11. Those were huge bills that nobody can read and that were full of other arrangements that had nothing to do with 9/11 restructuring, COVID relief, etc. So the entire Patriot Act and all the suppression, for example, of El Salvador. Those things are all shoved into these big bills, and it's for me as a European, it's very strange to see that the rule of law in America is like that you can make laws that have articles in there that have nothing to do with the topic at hand, that nobody can read in time, and it adds to what Willem says, that capitalism has lost the game and we're straight back to communism. I fear that, but on the other hand, I have this hopium, maybe this dream of the sovereign individual, that this same technology that empowers states and big companies, that also empowers individuals, and that the open individual network always wins from the big state networks that are they're big, but they're slow, they're not innovative, and they're like David and Goliath. They're
a private members club.
Yeah, so I think moving to jurisdictions where capitalism still has any chance is a thing of the future as well.
I'm in Switzerland now.
Yeah.
Mr. Plan B.
No, good point.
I'm here in Switzerland because I hope this will be a feast of freedom within the ever increasing powers from Brussels and the EU. The Swiss just went out of a very serious meeting in Brussels with the EU, and these talks collapsed because the Swiss don't accept that Brussels will try to control more and more parts of the economy here in Switzerland and of the regulations. And of course, we hope here in Switzerland that we can be a small El Salvador. But we're surrounded by EU countries, and when the EU wants to try to make life miserable for the Swiss, Well, I hope the Swiss will win, but
It's fascinating chat. Yeah, I mean, I'm gonna take a trip down to Tesco's now, get some tinned pineapple. Can't get a gun, but I can get a fork. I'm gonna have a fork, some Bitcoin, and some tinned pineapple, and build a underground base in my garden. Look, I'm not that pessimistic. I fear, like I do worry. I do fear a crash, or I do fear some reset that kills the pensions of people who are planning to retire in retirement. I fear a lot. It's a very tricky situation, and it does this thing where it shifts me between. It pushes me towards the anarchist view of the world, when I also always struggle to understand how an anarchist world will function. It puts me in this problem being a centrist. You can never really like pin yourself to anything. You just float around. Oh, that sounds like a good idea. No, that sounds like a good idea. Let's just make everything work. But fascinating chat. Glad to have you both on. Plan B, it's always great to talk to you, man. I always enjoy having your company. And Willem, it's really great to have you on as well. I appreciate you coming on. If people wanted to read your books, check out your work, I'm about to go on holiday, so I'm going to order your latest book and take it with me.
Well,
but where should they go?
We make life very easy. You can go download The Big Reset for free. Just Google The Big Reset download. You will end up to our website, Commodity Discovery Fund. You can download it. You can also buy books on Amazon. There are some more books. I also wrote The Tesla Revolution, which is totally different topic. It's on the world of energy and EVs. You can follow me on Twitter. You just Google for my name. That's the only social channel I really work on. And well, that's about it. Thanks for having me. It was a great discussion. Thanks, Wendy, for inviting me as well.
No, it's great. It's like really great to meet you. I'm fascinated by your work, and I will definitely be downloading the book to read when I'm lazing around with cocktails on the beach next week before everything blows up. Plan B, everyone knows who you are. You don't have to share that. I'll put it in the show notes anyway, but everyone listening knows who you are, so you don't have to worry about that. But it's good to hear from you, brother, and glad you're doing well. Glad you've had a nice little sailing break, and I'm sure I'll be in touch with you in a few months to say, well, we're going to be looking at that model and going, did it work? Didn't it work? What next?
Thanks, Peter.
Take care, buddy. See you soon. See you soon, Willem.